Gerald Loeb wrote a book called, by the way, welcome to the B.F. Anderson Technical Report for June the 8th. We're going to do this in two segments, or where we will do the market report next week, technical report the following week. So we're going to kind of mix things up a little bit. Let me know if you have any questions about this, but it's just kind of a way for us to get more information to you and change things up a little bit. If you want to see the current market report, please go to the webpage, bfanderson.com, and just scroll to the bottom of the first page, and you'll see market report. Click the tab, and there you go. But I wanted to start out with a quote this morning from a book called The Battle for Investment Survival, written by Gerald Loeb in 1935. Gerald Loeb was a partner of E.F. Hutton and Company, and back in the 1920s, that was the big firm. And Loeb's job was to analyze all the client portfolios of the firm and to determine who was successful and who wasn't. And he wrote a book about it. Very, very important book. Let me read the quote. It says, "Obviously, our ideas will sound wrong to most people. Any investment policy followed by all naturally defeats itself. Thus, the first step for individuals really trying to secure or preserve capital is to detach himself from the crowd." So Loeb was just trying to give us some insights into an area called behavioral finance, where you want to understand the behavior of investors, where if everybody's piling into one area, you need to be very aware of that. And, I will say that we have started a super bull market here because for the last several years, actually the last 15 years, people have not been buying stocks. There's a lot of dry powder on the sides. There's a lot of fuel to kindle the fire. Well, let's look at the NASDAQ. As you can see here, we've got two moving averages, the 25-day versus the 50-day. The NASDAQ is consistently making new highs, very strong uptrend, looking good, probably the strongest index of all the indexes that we're looking at. Take a look here at the mid-caps. We've got a little bit of a problem here with the mid-caps. They're somewhat stuck. Now remember, these are the middle-sized companies. These aren't the large caps like the NASDAQ and the S&P. And usually the rule is when the generals lead, meaning the large caps, usually the mid-caps and small caps will follow. So when the generals lead, the troops follow. So we're seeing somewhat of a stuck situation here. The moving averages are kind of mixed. The mid-caps are needing to get going. Now here we have the New York Stock Exchange, all the stocks on the New York Stock Exchange. Again, not as strong as the NASDAQ, however, breaking out. Moving averages are fine. The New York Stock Exchange is not as favorable as the NASDAQ, but looks good. Now again, here's the fly in the ointment. This is the small caps continue to move sideways. We had the big run up after the election, but since then they really haven't gone anywhere. But it's a stock picker's market, and you have to be very selective. Now here's the S&P 500. Again, it's looking a little bit more like the NASDAQ. You can see the large cap growth stocks are really taking a lead here in the S&P. Moving averages are fine. Everything looks good here. Now, I wanted to look at the top 5. These are the top 5 stocks that were on the market report this week. Activision Blizzard, again, you can see a very powerful uptrend here, almost like smoke up a chimney. Moving averages are incredibly strong. This is what I mean about a stock picker's market. This is a large company. They're in the computer gaming business, which is really nothing more than a software platform technology, which has to do with cloud computing. Very important. This is a technology stock. Again, technology continues to dominate the market. This is Micron Tech. Now, this is another large cap technology stock that has really broken out. Looks fantastic. A stock that we're interested in, and I will have to disclose that we own this stock for our clients. This is NVIDIA. Incredibly strong. This stock has been one of the most powerful stocks for the last 2 years. They are very involved in autonomous automobiles. In fact, an analyst this morning raised the price target, I believe, to about 168 based on the autonomous driving technology. In other words, they've got a general processing unit, what they call a GPU, that is water cooled. I mean, it's a very fast computer. Tesla, the electric automobile company, is using this technology for their Autopilot 2. Now, NVIDIA is definitely a strong one and one to keep an eye on. Now, another stock that we own that's been doing quite well is a company called Shopify. Now, Shopify, again, is a software platform that is cloud-based. They are in a partnership with Amazon and Facebook, which is basically the concept here is the small entrepreneurial retailers, the mom and pop stores, are coming back. And they're coming back as e-commerce stores, and they're using platforms such as Shopify. Now you can see this drop here in the stock here recently. That was a secondary offering. The company raised about $500 million. Speculation is they may make some acquisitions. Now here's Tesla, which has been incredibly strong. Just really going up nicely. There's a big short position in this stock. There's a lot of, I would say as much as 30% of the outstanding shares are shorted. And, the thing about Elon Musk is he is absolutely brilliant. And I just don't know why people would want to short this stock. I mean, it's like you're betting against this guy. I mean, he has a worldview that is very positive. So that's it. Take a look at the market report. It's on the webpage. If you have any questions, give me a call. Thank you.